If you've clicked on this video, you probably already know the importance of support and resistance levels. And despite the simplicity, they can offer a huge edge as a trader. But how do you effectively use them? And use them in a way that can allow you to consistently profit in the markets. So in this video, I'll be going over probably the most simplest trading strategy out there that you can start using on a daily basis to profit in the markets. This strategy certainly has the potential to become your next bread and butter setup. For those of you who are new to this channel, let me quickly introduce myself to you. My name is Shaun. I've been trading the markets for 8.5 years. I'm a Dubai-based active US equities trader, and this channel is all about no fluff, straight to the point trading content that could really help you move the needle when it comes to developing your own trading skills. So if you want to see more videos, consider subscribing to this channel. And while you're at it, consider hitting the like button, as it really helps the channel with the YouTube algorithm. And with that, let's actually get into it. So in order to explain how do you use support and resistance levels and make consistently profitable trades, I'll be using an example of a trade that I had taken a while back on a ticker symbol called FUTU. So I'll be using this trade as an example and showing you how do you effectively use support and resistance levels, and when do you even use them. And for those of you, real quick, a quick brief on support and resistance levels. They're pretty much just areas on the charts where prices have previously stalled, reversed, or made some extreme price action or price movements. So we as traders are identifying these areas on the charts, visually identifying them, and creating or drawing these levels or lines, and just using it as a visual reference or a key point for us to sort of monitor and trade based off of them. If you want to know more about exactly how do you draw accurate support and resistance levels and how do you identify these levels, there's another video I had made. You can check that one out. It should pop up somewhere on the top right hand side of this video, so you can check that one out after watching this one, of course. So before even we look at the stock, I like to look at SPY. SPY is the ETF for S&P 500, and S&P 500 monitors or sort of tracks 500 of the top companies of the US stock market. So the reason I look at this is because I want to see where this overall SPY could be moving, or if there is a certain day that SPY looks like it's going to be moving to the upside, I want to try to look for more opportunities that are basically long opportunities, or vice versa. If the market looks really weak, I want to prioritize looking for more short opportunities. And the reason for that is 80% of stocks tend to move in the similar direction as the overall market. So I want to sort of be in the direction of the overall market. Now, on this particular day, the SPY, when I was doing my morning research, if you just focus on my cursor over here, this is where I was doing my research, and this all happened later in the end of the day. So I didn't know this information at that time. But to me, while doing my research, market was just going sideways, and I didn't have a particular direction to pick. Basically, I was just free to pick long or short opportunities for that day, depending on what was a good opportunity for me at that time. I chose FUTU, this ticker symbol, as a stock to trade. Number one, it is a Chinese stock. And number two, it was basically Chinese government had released a stimulus because the government or sort of the economy was struggling and starting to slow down. So the government released a stimulus package, which is going to pump in some more money into the economy, and it's going to start fueling the economy. After the stimulus, the export numbers for Chinese government or Chinese economy really came out, and they fell short. So the Chinese economy wasn't doing as good as they were expecting to do, and all the Chinese stocks were actually dropping down because the confidence in Chinese economy and Chinese companies was sort of dropping down. At least that's how the traders were reacting that day, and I was more interested in going short on this particular opportunity. So this is the daily chart of FUTU, and while I was doing this is the daily chart. Basically, we had made a huge move run up because of all the stimulus news and what was happening and what was expected to happen after the Chinese government had announced their stimulus. So this is all the anticipation and the positive momentum to the upside. So these stocks and most Chinese stocks actually were already kind of going parabolic, and after this gap down, they were just starting to go sideways. So it could also indicate, one, that a lot of traders are going to be starting to start taking profits. Number two, the export results were really bad. So this information is the very first thing when it comes to trading the markets in the right way. And support and resistance levels are just tools that we're going to be using in order to time the markets and actually execute our trades to profit from the markets. So this is the 30-minute chart of the same day. And this is where I actually found the stock. If you can just focus on my cursor over here, the pre-market session, this is where I was doing my research. And these are all the support and resistance levels that I had identified. Let's actually go back on the daily chart. So key level over here, 112.21, 103, 96 or 95. I can't see, it's a bit too small, but I think it's, 95, let's just call it that. So these are the 3 or 4 levels that I had identified. This is 82. It was much further. So I had drawn this previously, but it wasn't really relevant for that day because it's very less likely that stock is going to drop from 103 all the way to 82. So that's the reason these 2 levels were actually more relevant, and I had drawn these arrows. And a quick tip, guys, when I used to monitor, like this is maybe like 3 or 4 years back, when I was monitoring like 6 or 7 stocks at the same time, sometimes it used to get too much for me. And what I used to do during my stock research, I used to just simply draw these arrows, so I never really forget my initial trading plan or initial thoughts that I used to have before the markets open. Because when the markets open and when you have money on the line, it's kind of easy to just get a bit more pressurized and make silly trading mistakes. So just on a quick note, so again, going back to the plan, so this was a plan for me. I was only looking to short the stock, and the plan was for me, it either comes down after the whole pre-market session, it comes down, retest the resistance level, and I want to short over here. Or if we break through 95 area and just sort of break down essentially, and then I would have targeted the next level, 82, which was less likely of a scenario because we just kept on going on the sideways. So the way that was the plan, and this is how you effectively use this, because prices tend to move like ping pong balls, right? I mean, it goes from one level to the next. So the simple is that the price, it was just pre-market somewhere over here. So I was just waiting for it to come up to 103 and target the next level, which was 95. Simple as that, ping pong ball, right? And that's exactly what I did. Price came all the way over here. This is the 5-minute chart, which is the intraday chart. I waited the whole pre-market session, and as soon as the market opened, the price discovery area, price came all the way to 103, and this was the initial plan. And this is how you effectively use support and resistance levels, using the information that you gathered during the research phase and using these levels as a tool to just time the market essentially. So waited for this. We got this rejection. We went all the way up to 104.50, got rejected, came all the way back down, couldn't close above 103. And that's where I initiated my short position, the very first position. This was a minor level that I had identified on the intraday sort of charts, like the 5-minute. If we go back to the 30-minute charts, you see this pre-market level that I had identified. So I just created a dotted line because it wasn't a major level for me. So took some profits over here. As soon as we broke down below this profit, sort of this minor level, I added some more. After a while, I added some more. Later on, it ended up getting me wicked out. So I had closed half of my position over here, and the rest half was still kind of open. So I was, instead of like one big position, I took some profits over here, added 2 more tiers of risk over here. So I really added more risk because this was really a confirmation for me to, add more size to this trade. And I got wigged out. So that was like some profits. More profits could have been made, but I had to like reduce my risk basically over here. And then final position, I closed over here, right around 95.74. Now, I remember this trade particularly because I think it was 12:30 in Eastern time, and it was around 6:30, 7 o'clock, might have been some. I can't remember exactly Dubai time, but it was basically afternoon for me, and I had just gotten up and just placed a limit order somewhere over here, and just gone and have some dinner. So my limit order didn't really get filled because the market just came down all the way super quickly and just kind of got back up. So my limit orders didn't get filled. And later on when I came and saw this, because I also had email alerts set up on my phone. So I just came and saw this, and I just manually just got out of my position. And that's where I just fully got out of my position. And that's how effectively the trade went. And this is also 1 minute chart. So that's how you effectively use support and resistance levels to consistently profit in the markets. And before ending this video, I really want to quickly share with you guys that 90% of traders unnecessarily lose thousands of dollars and years of their lives despite being passionate about the markets and despite having a good work ethic. And they certainly don't lack information, but what they lack is clarity and the right guidance. And I've created a mentorship program which is designed to take anybody from not knowing anything about the markets to becoming a consistently profitable trader. And the way the program is designed is you have the right information about how to trade the markets, but with an ongoing mentorship and feedback sessions, which are really designed to keep you on track and really accelerate your learning curve as a trader. So if you're really serious about learning how to trade stocks in the right way and want to develop as a trader in the fastest way possible, consider reaching out to me. There's a link in the description below. You can schedule a call with me and we can have a chat and we can see if there's a fit. I hope you found this video helpful. If you did, please consider hitting the like button, subscribe to the channel to see more content just like this one. And with that, I'll see you in the next one. Take it easy, guys. Cheers.